Equity Mate.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Equity Mate.
Welcome to another episode of the Equity Mate Summer Series, proudly brought to you by Superhero. Over 12 episodes, we're deep diving into some of the most exciting, interesting, and well-known companies from both here in Australia and over in the US. In some instances, we'll be hearing directly from the CEOs to give you first-hand insight into their companies. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
I'm good, Bryce. I think you made a mistake in your intro, though.
Oh, what did I say?
Well, you said we're diving into the most exciting companies, and the New York Times actually called this company, quote, a very boring software company. So I think we need to change the intro.
Okay, well, look, I'll go back and have a look at it. But I think this is a rather interesting software company, albeit boring.
Something can be interesting and boring. It can't be exciting and boring.
Yes, true. But we're here to talk about a homegrown hero, and that is Atlassian, listed over in the US. The ticker is TEAM, TEAM. You can grab it or have a look at it on the Superhero platform. So a thank you to Superhero for sponsoring the summer series. Superhero allows you to buy Aussie and US shares and ETFs with no monthly account fees, and you can now earn Qantas points with Superhero. So visit superhero.com.au/Qantas to learn more. Eligibility criteria, terms and conditions, and fees and charges apply. So Atlassian Corporation, we're going to have a look in this episode at what it does. We're going to have a look at the industry, its financials, future prospects, and a few fun facts. And speaking of fun facts, a reminder that you can win $1,000 in a Superhero wallet by just telling us your favorite fact from this episode in the comments section over on our Instagram page for this particular episode. So check out the Atlassian post over on Instagram, leave your fun fact, and we'll announce a lucky winner at the end of this week on our stories, all thanks to Superhero.
Yeah, and there is a lot of interesting stats and facts in this company's journey and where it is today, because Atlassian, despite what the New York Times said, is just a phenomenal story.
Yeah.
And as Australians, we should be so proud of this company because it is world class.
It is. It's a shame it's not listed here in Australia.
Well, I think
we know the reason.
The $112 billion market cap that it enjoys may not enjoy it if it was in Australia.
Absolutely.
But let's start there, because people, we think about Atlassian being a big Australian company made good in the world stage. It is a big software company, full stop. It's one of the top 20 software companies in the world in terms of market cap, in terms of size. It's a giant.
It is an absolute giant.
Yeah.
And it's got a pretty fascinating founding story. Pretty interesting one that kicked off. I'm sure you would have heard about the founders, Mike Cannon-Brookes and Scott Farquhar. Mike is on an absolute property tear at the moment.
Yeah, he's going to own all of the Southern Highlands.
Buying all of the Southern Highlands. I think he owns the $100 million property down in Eleanor or something like that, down in Sydney Harbour. But anyway, they met at university, UNSW, I'm pretty sure it was, and Mike sent an email to his class, I think it was a computer class at the time, asking who wanted to start a business, and only one person replied, and that was Scott.
Yeah.
I love that.
Yeah.
Who wants to start a business?
And to be clear, this wasn't Mike's first business. Mike and another classmate started a business. So back in the day, you remember like early internet, and you had bookmarks on like your home computer, but then you'd go to work and you'd have a different computer at work. And so their very first business was a bookmark business where you could access your bookmarks from whatever computer you were on. And anyway, a competitor over in the States raised like a stupid amount of money, and they were like, we're going to get blown out of the water here. So Mike went over and sold it. But then Mike was keen to do another business. He was still at uni. Scott had done the corporate thing. I think he worked at IBM, PwC,
Yeah,
ASX, hated them all. And so Mike sent an email to the class and said, who wants to start a business? Scott, being dissatisfied with the corporate world from the few tries he'd had, said, I'm keen. And they started a business. And what a business that was.
Yeah.
What were they doing?
So they were supporting, it was IT support, I guess, for a Swedish software company.
Did they have the Swedish software? Did the Swedish software company know that they were doing IT support?
No, that's the best part about it. They essentially set up a company that, supplied support for this company overseas without, I guess, not the permission or the knowledge of this or the engagement from this Swedish software company. So they're up at all hours of the morning because of the time difference, and a lot of hustle.
Yeah, and they wrote all this documentation, put it on the web, made a website, and then if people were searching like support, they would come across their website first. But apparently, the documentation they wrote was so good that people only ever contacted them with really hard problems that they couldn't solve. So, not the best idea, but I think they quickly realized that the business, the scalable business is in selling software, not in selling support for existing software.
Yeah.
And these guys, they were both incredibly good coders, I guess, and they'd built a bunch of products for themselves internally that really started the Atlassian software suite. I think the first acronym of their product was R, so it was like Atlassian software support, or I can't remember what it was, but yeah, they eventually that formed the backbone of what became their first product, which was Jira.
Yeah. I've got a few things to say about Jira, but we'll wait for that.
Okay, well, you can say them now.
No. Let's wait till we talk about their product suite.
Now, there's a couple of things that I think are pretty interesting from the founding days. So they had a share. So they each owned 50% of the company, and in their shareholders agreement, they needed a way to, settle disputes.
Yeah.
Because if you both have 50%, who has a deciding vote? Do you know what their final decision-making, point was?
Yeah, it was scissor, paper, rock.
Scissor, paper, rock.
Which is just crazy if you think about it. But I love, if you got to respect the game, I guess, and that's the way they did it. And it was whoever won it, that was the way they were going to go.
Yeah. So that I think really gives, I guess, the vibe of what they were in the early days, just figuring it out.
Yeah. So the business IPO'd in December of 2015 on the NASDAQ with a market cap of $4.4 billion, and ran, as you said, it was to the fanfare of the New York Times calling them a very boring software company. However, since then, they've just continued to grow, compound. It's just been a fascinating story to watch. Market cap today of about $112 billion. So if you'd been able to invest pre-IPO or even at IPO,
even 2 years into the IPO,
you would be you'd be doing very well.
Yeah. So Atlassian is often it's somewhat misunderstood or poorly understood as a business in terms of like the products and services that it offers. So I think that the best way to conceptualize it is the picks and shovels to teams. And in particular, software development teams, but teams more generally.
Well, their ticker is team.
Yeah. They're all of their business philosophies are around like how do we make teams work and stuff like that. But really, where it started was with software developers, and Atlassian was they wanted to make software platforms. They wanted to make tools that allowed software developers to work better, to work more effectively. And there's a number of little aspects that I want to get into about that because there's some cool stuff that they've like changed a number of different models, but that in itself is the business. Building those platforms, building those tools, because teamwork is complicated and teamwork in big businesses is particularly complicated. So the average large enterprise uses 288 software as a service applications, which increased 30% from last year. And companies of all sizes just drown in the amount of communications and project management and, you know, all these different platforms that exist. It's a bit of a mess out there. And so Atlassian is just trying to, I guess, simplify that. That's their mission.
That's their mission, yeah.
Now, you have some thoughts on Jira? Do you want to share it now?
Well, should we use that as a segue to talk about some of their core services that they have built to help with this? So Jira is a project management tool where, you know, you use it to plan and then track how you're going with large scale projects. There's Confluence, which allows teams to create and share documents and data.
It's like a Google Docs vibe, isn't it? Yeah.
Trello, it's a way to track who's working on what, process flow, and how far along certain tasks are. There's Bitbucket, helps teams to create and share coding work. And then there's the Jira Service Desk, which is a self-service portal that allows teams to quickly respond to issues that have come through from customers, which is obviously very important, customer service. Now, look, there's no doubt, Ren, that these are all incredibly successful services. They're incredibly successful software as a service that they've built. However, when I was in corporate, I didn't work in software, but a lot of these platforms they tried to implement, and they all do still have a pretty sort of software-y focus, if that makes sense.
You mean like a developer focus?
A developer focus, yeah. And so it's hard to... it's not hard, but it was more challenging to implement the use of these in non-software related projects and that sort of thing. But we eventually got there. But that's sort of my gripe. And I know that Atlassian are changing it significantly to make it more adaptable to non-sort of developer use.
So I think this is a good point to talk about how Atlassian grew, because it's a model that they really pioneered, and they pioneered really as a matter of circumstance, like they were forced to pioneer it, but a number of companies have followed suit. So Slack was sort of, I guess, lionized, or like people were so glowing about it because of their bottom-up approach, where they would... basically find a way for a team, like they would encourage just teams within a business to download Slack and start using it, and it eventually spread like a weed throughout the entire business because it was just so much better than email. But it was a bottom-up sales approach rather than a top-down Slack's head of sales meeting with a business's chief information officer or chief technology officer and trying to sell enterprise software. And, you know, that was how software was sold. That was how IBM and Oracle and Microsoft sold software into big enterprises. It was top down. And Slack, you know, was celebrated because they were bottom up. But Atlassian were the guys that pioneered this approach. And they have this motto that software should be bought, not sold, which I love. In terms of all of their peers, they have the lowest percentage of revenue spent on sales. Just because they don't think it should. But it also stems from the fact that Mike and Scott were based in Australia, so far away from a lot of their customers in the States. And so people had to go to their website and download it, and Mike and Scott couldn't be in there, you know, selling in person. But that's why the developer focus is so strong, and that has been a real, I guess, driver of their growth, because similar to Slack, how it was bottom up, a team would start using it and it would spread because it was so good. For Atlassian, developers would start using it because it was optimized for developers. It was best in class for software developers. But software developers are so integral to businesses these days, and they're so integral to cross-functional projects that all of these different teams would have to start working with developers, you know, marketing, legal, accounting, all the different business units. And what they saw was developers would start using it, and then the use of the software would spread throughout organizations. And, you know, you were probably one of those tentacles at Woolies as a non-software developer. And that approach of bottom up, get into a business, let it spread organically, is the sales playbook that Slack followed and so many other businesses are now trying to follow.
Yeah, it's pretty powerful when that happens, really, because, it's being bought on utility rather than sold down your throat because it's the next best thing. Yeah. So, Ren, you mentioned they don't spend a lot of money on the sales side, but they do spend a fair bit in that mergers and acquisitions space, having invested over $1 billion over the last sort of 10, 20 years or so, 10 years.
In the past decade, they've spent over $1 billion.
Yeah. So we don't need to go through all of the acquisitions, but they've made some pretty significant ones. Trello was one in 2017. Help, which is a tool that generates help desk tickets from Slack conversations.
I think so you mentioned the 5 big business units above: Jira Service Desk, Confluence, Trello, Bitbucket.
Yeah.
Trello and Bitbucket both acquired in the last 10 years.
Yeah.
So Atlassian is a company that's not scared to acquire and grow by acquisition. What they have done really well is integrate these businesses into their offering, and it's been a real 1 + 1 = 3 approach. Whereas a lot of companies that have this many acquisitions, you see maybe diminishing returns, but pretty impressive M&A activity over the past decade. One thing that I think we should highlight, which again I think shows something about the attitude of Atlassian and the way that they're willing to take risks and then walk away from things that aren't working, is the workplace chat. So in 2012, they acquired HipChat.
Yeah.
In 2015, they acquired Hall. Both were work chat companies. And they then rolled them into a product called Stride that they launched in 2017. And this was Slack. This was them going head-to-head with Slack. So Slack was founded in 2009, and Atlassian obviously decided they were going to go head-to-head. 2017, they launched Stride, and it is their Slack competitor product. 2 years later, so after acquiring these two companies, rolling them into a new standalone business unit, competing for 2 years, in 2019, they recognized the writing on the wall that Slack was winning.
Yeah.
And so what did they do? They shut the business, sold Stride to Slack, in return took some equity in Slack, and then partnered with Slack and integrated Slack into all of Atlassian's services.
Great play.
So rather than saying, we've got our own work chat product, we're not going to partner with Slack, we're going to compete, they said, sack it, our customers prefer Slack, shut it down, let's integrate Slack into our platform so our customers can use the work chat product they want with the platform that they want.
Yeah, pretty impressive.
Yeah.
Good business now. Well, Ren, before we jump into competitive advantages, is there anything else that is interesting about Atlassian?
I think a few stats to just rattle off. So Mike Cannon-Brookes and Scott Farquhar are Australia's first tech billionaires.
Yes,
so
I remember that.
Forget the miners, the first tech billionaires. 83% of Fortune 500 companies use Atlassian products. Pretty impressive. 10 million monthly active users on Atlassian Cloud. We'll talk about cloud in a sec, but their big, hairy, audacious goal, and that's how they phrase it, is 100 million cloud users. They have 200,000 customers over 190 countries. They are a truly global business. So, yeah, I think that sort of gives a scale in terms of how big they are and how integrated they are in some of the biggest companies in the world.
Yeah. So when looking at these companies, Ren, it's always important to think about the advantages, the competitive advantages that they have over some of their peers. And, it's pretty impressive because there are two clear competitive advantages for Atlassian. And the first is their moat.
Yeah.
And given that they are creating software as a service for the workforce for huge organizations, 83% of the Fortune 500, changing for these companies between platforms and services would be a nightmare.
Yeah, so this is known as switching costs.
Yeah.
And once they're integrated in an organization, the cost of retraining the entire workforce, migrating data, the risk of losing information or data or losing productivity because of a worse platform or a platform the team is less familiar with. There's a big switching cost that comes. So that's the first moat. The second one, I think we can call a network effect, but I think this is where we should really bring in Atlassian Marketplace, because Atlassian have built this great platform, but now they're allowing other developers to build on top of it. And basically, if you or I want to create a product for software developers or for teams to use, we can create it and sell it through Atlassian Marketplace, and Atlassian users can buy it and then integrate it into the platform and use it themselves. And so it creates this virtual cycle where Atlassian is the platform on where all these other developers are building products, and then all of these customers that want to use those products have to access it through Atlassian's platform. So as they keep growing their customer base, more and more developers are incentivized to build things for the Atlassian Marketplace. And then as more developers build things for the Atlassian Marketplace, more and more customers are incented to use it because the platform has more and more utility. So it's this virtual cycle that becomes very hard to break. The customers and developers become very sticky. Because if you and I wanted to start a rival software developer workforce management platform, we all of a sudden don't have all these third-party developers building additional functionality on our platform for us.
Yeah. It's pretty amazing. So industry, there's some pretty big competitors out there. They're competing against the likes of Microsoft, who have their suite of products for working with teams, and they actually have teams literally. There's GitLab, IBM are playing. ServiceNow is massive. Scrumwise and GitHub. Salesforce. Yeah.
I think there are so many alternatives out there. So many big software platform alternatives. The other thing to note is that do you think Atlassian's profitable?
I think it is.
It's not.
Jeez.
Yeah, surprisingly enough, it's not. It hasn't been profitable for years. I think it was profitable, and then from like F16 onwards, not profitable.
Wow.
Yeah. But if you look at it if you look at a number of those companies that you just mentioned, the Microsoft, the Salesforce, the Oracles, the ServiceNows, and you compare Atlassian to them on a enterprise value to revenue ratio. So almost price to sales, similar vibes, but enterprise value to revenue. Atlassian is expensive. 40 times compared to Microsoft, 12 times, compared to Salesforce, 10 times, compared to Oracle, 7 times.
Wow.
So I think that's, we've just spent 20 minutes speaking glowingly about Atlassian, but we're not breaking new news here. The market realizes how powerful Atlassian is, and a lot of that's priced.
It's priced in, yeah. Well, let's look at some of the financials, Ren. So $112 billion market cap. The share price in 2016 was $27.49. And at the time of recording on the 11th of November, it is about $440, $444. Amazing growth, 74% compound annual growth rate for its share price. And it's also been pumping out some pretty good revenue numbers. In FY 2016, it did just shy of $500 million. And in FY 21, it's now doing $2.1 billion. So that's compound annual growth of 36%. Over the last sort of 5 years or so.
Yeah. So as I mentioned before, they're not profitable. They lost almost $700 million in FY 21. And those numbers have been expanding since FY 16. So,
why?
Oh, I guess, I think part of it is this migration to cloud, which we can talk about. But I guess also they're just investing heavily in platform acquisitions, a bunch of other stuff. They're growing, I think, is the long and the short of it. They do have about $1 billion cash. They do have about $1 billion cash on their balance sheet. So they've got a fair bit there. But I think the important thing to note is while they're not profitable, they do generate serious free cash flow.
Yeah.
So F16 they generated about 95 million. F20 they generated about $500 million. So 51% compound annual growth rate for those 5 years. So free cash flow, that is cash that the business can use to, grow, like invest internally or, acquire or sit it on their balance sheet. So that free cash flow growth is impressive.
So, Ren, we've mentioned the cloud a few times. So let's move to that and have a look at what the future holds for Atlassian. We've seen over the last few years that they've been shutting down their server-based products and focusing on cloud and the sort of data center editions of those, and it's a pretty interesting move.
Yeah, so what do we mean by that? Back in the day, if I was Atlassian and I wanted to, I wanted to sell my software to someone, I would either need to send someone out to go and install it onto a company's servers, or the company would have to download it and install it on their servers themselves. But that business model is outdated now. Everything is cloud-based. It can just be downloaded, or it can even just be accessed through the cloud. So Atlassian have made the decision that they're pivoting. They basically, I was reading something, they forked their code and they just said, we're only going cloud now. So they have stopped selling server products. And I think in 2024, they're just cutting them completely. So there's a few years of people like legacy to move them over, but then 2024 it's done.
Get out.
You're out. You're either you've moved over and you're hosted in a data center, hosted on the cloud, or you don't exist in our books anymore.
Yeah, nice.
So I mean that's a big move for a business to disrupt their customers like that.
Absolutely.
And so if you're looking at what the next few years of Atlassian is going to be, it's going to be that. It's going to be telling the market how they're going with that customer journey and moving customers over and what their customer churn rate looks like and all of that stuff.
Yeah, and it's a big opportunity as well. They think that it's a, $24 billion opportunity.
Yeah, that's generally how big the market is.
Yeah.
Yeah. I think it's important to note their cloud offering is more expensive than their server offering for most customers. So it is going to be a lot of effort to transition them.
More expensive than server. More expensive than server, but I wonder how expensive it is relative to competitors.
Yeah, that's a good question.
And also, you'd probably cop it if it means getting kicked off and having to start again. Integrating a new competitor offer like Nightmare, you're likely to cop it.
Yeah,
I would imagine.
I think so.
And I think Atlassian probably know that.
Yeah. So we mentioned their big, hairy, audacious goal before.
Yep.
They've got 10 million cloud users. They want to get that to 100 million monthly active users.
Did they say by when?
No, I don't think so. Maybe, but not in what I read. Revenue of 2.1 billion. They want to get to 5 billion in revenue.
So they want to 10 times their users, but double their revenue.
Yeah.
Doesn't make sense.
You'd have to ask them.
Maybe that's why they're unprofitable. And so one other thing, Ren, just to close out, is their spend on R&D. We know that a lot of managers look at what companies spend on their R&D, and Atlassian spend 35% of their revenue on R&D.
Which is heaps.
Yeah, it's massive.
Yeah. And they have a chart in their Investor Day. They do Investor Day 6 pages. You know who made that famous?
Investor Day 6 pages.
No,
what do you mean?
6 pages.
Oh, it's 6 pages only.
I think they got six pages.
It does ring a bell, but no, remind me.
Amazon,
okay.
Bezos had a rule that if you wanted to have a meeting, you had to write a 6-page document.
Yeah.
And everyone would get
it.
into the meeting and read it, and then they would have a conversation.
Yeah.
So Atlassian, their Investor Day, they had a bunch of 6 pages. So like one on strategy, one on whatever cloud, one on whatever. But their one on R&D was fascinating because they compare how much they spend as a percentage of revenue on R&D compared to a lot of their competitors, and it's
Massive.
meaningfully more.
Yeah.
Similar to what we were saying earlier about how little they spend on sales compared to their competitors. But I think what's really interesting is how they try and encourage, innovation internally. So they have this new products framework, and they do, the standard things that big tech companies do, hackathons and all of that stuff. But they're explicitly looking for $100 million businesses. That's what they're telling their customers. And from memory, one of their big products came out of this internal new products framework process. And it would be better if I could remember which one it was.
Do they give their staff equity in it?
Imagine if you built $100 million business. You'd be like, damn it!
Damn it!
But I think if there was any major software business you'd be happy to build it for, it's probably Atlassian. They are universally known as one of the best places to work.
Yeah.
I've been to their Sydney office.
Have you?
It is so nice.
Well, aren't they also building a $500 million ultra green, sustainable tech hub here in Sydney?
Maybe.
Yeah,
Probably.
I think so.
Yeah.
Yeah, it's meant to be nuts. But anyway, look, as we said at the start, amazing story, homegrown heroes here in from Australia, listed over on the NASDAQ, but you do love to see it. There's a great podcast to listen to get more insight into the founding story. It's called Is it The Quiet, or is it the How I Built This? It's the How I Built This one, with Guy Raz. How I Built This. Go and listen to that. It's really interesting. You get some further insight. But look, that does bring us to the end of our episode. Thank you to Superhero for sponsoring our summer series. Superhero allow you to buy Aussie and US shares and ETFs with no monthly account fees, and you can now earn Qantas points with Superhero. So visit superhero.com.au/Qantas to learn more. Eligibility criteria, terms and conditions, and fees and charges apply. Head to our Instagram for your chance to win $1,000 in the Superhero wallet as well. Plenty of fun facts in this episode, so pull a few out and leave them in the comments for the Atlassian post. And stick around because we're staying overseas next episode. We've got a CEO of a really interesting company, and that is the Australian CEO of Peloton.
Yeah, can't wait.
Us. Yeah,
more unprofitable US tech.
More unprofitable US tech.
But one of the most fascinating companies of the moment.
Absolutely, yeah. And I'm looking forward to it because Ren will only be pitching the CEO on trying to get a Peloton in his bedroom.
We found out another media company was sent a free Peloton, and I am ropeable that we didn't get sent one. So thus, this begins the campaign.
So stay tuned on that front. But thanks for joining us. It's been an absolute pleasure. Hope you got something out of that, and we'll pick it up next week.
Equity mind.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.